In this video, I'm going to show you the best ICT PD array. So let's get started right away. And the PD array I'm talking about is inversion pair value gap. Now let me explain which inversion should you take, when, and how it actually works. So what you're essentially looking for is for the price to go up, leave a fair value gap here, and then see a candle just ignore and totally disrespect this fair value gap. Once you see that, you want to put an order here and go short. And that's exactly what I've been doing. I have made 400 bucks, but I could have made way more. And today, all of the trades I took that were from inversion fair value gap were winning trades. And those that I took just from normal fair value gaps, I lost on them. So let me just show the examples so you can see how it actually works. Right here, I was expecting that we are gonna go for this draw on liquidity right here. And the time is important from 3 o'clock to 4 o'clock. Okay, so that's my time when I trade in the morning. 3 to 4 o'clock. So I was waiting. And now here you can see that there are no fair value gaps or very small ones. But you know, if you go to the 2-minute chart, you can see there is a fair value gap. 3-minute chart, there is also a fair value gap. So I was waiting for this to be an inversion and trade from that one. But that's not what actually happened. The price started running and running and running. And I saw this fair value gap right here. And I took a trade from there and into this fair value gap here that was completely untouched. So just one quick tip. So first tip is, when you see a fair value gap that previously was used for price to go to the opposite side that you're trading now, that one is a really good fair value gap. A fair value gap that was already used. Like here, right? Or this one, you see it was used here. Then we went above, closed above this fair value gap here, retraced back into it. This would be a great entry, but you know, sometimes you're just not fast enough. So entry from here and your target, whatever your target is. Now another trade here. We went down, took out this liquidity here. I was still expecting us to go for this buy side. We can see a fair value gap that also took out the liquidity. That's like also a great inversion. So just another tip. If fair value gap took out liquidity, it's also a great one. And that means that you can just trust it more. So fair value gap, we went above, closed above, entry here. My aim is always for some internal high and then all the way, you know, where is your target? And then like, you know, take profit here and take profit here. Very simple. Now, where should you put your stop loss? Stop loss should always be when inversion fair value gap is disrespected. So for example, let me look for one. So just like right here, move your stop loss at a swing high or low. So when you enter here on this fair value gap or inversion, your stop loss should be first here, but it doesn't mean that you will like hold it there forever. Okay. Once you see that price comes back down into that fair value gap and closes below, close the trade. Or if you do not want to close the trade, just wait for one more candle to see if it comes back into it or above. Because sometimes what can happen is you have a inversion and this is exactly this inversion, okay? And the price can do this. It goes below, closes below, but then it comes back up and does this. So sometimes it's better to wait for one more candle. Now, another tip. Always wait for close of candle on the same time frame. So if you have an inversion on 5 minutes, okay, on 5 minutes, like here, you wait for the 5-minute candle to close above. And then you try to enter on it. And also guys, I'm streaming now like every day. Today we made just $400. So it was all traded live and I'm gonna be now streaming just every day. London session, New York open and New York close sometimes. And now I'm gonna just show the final tip for those that are still in this video. Some of you might already know the 22 model. And this is where the inversion fair value gap is really like excelling. Most people, they see the 22 model that you have like liquidity here. It's taken out and then it reverses here. But what sometimes happens is you get an inversion here and the price does this and goes straight down for the other draw on liquidity. Where most people would be waiting for the market structure shift, you wouldn't. You would just wait for this inversion to get absolutely disrespected by this candle and enter on this inversion here. What can also happen is that you have like you have the candles and you never get a fair value gap entry. So what can happen is that you get one huge candle up, then one red candle here. It creates this fair value gap here. And then another candle that goes down, closes below this fair value gap, making inversion. And then the second candle goes into the inversion and then straight down and never comes back into this fair value gap, which is created like here from this candle.